Hi, my name is Abikale Emmanuel. I'm a Forex trader and a Forex coach. In this video course, I will be teaching you how to make money trading in the Forex market. Now, first of all, before you participate in the Forex market, you need to understand or acknowledge the risk involved in trading Forex. Trading foreign exchange carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. So before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss in excess of your initial investment. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. What is Forex trading? Forex is an abbreviated word for foreign exchange, and foreign exchange is the exchange of one country's currency for another. Forex trading is the simultaneous buying and selling of various countries' currency. It is the simultaneous buying and selling of various country currencies. Now, what's the similarity between the Forex market and the stock market? Now, when you buy a share of a company, you are buying that share with the anticipation, okay, that it would appreciate in value in the future. Now, same thing applies in the Forex market. When you buy a currency, you are buying a share in a particular country. Now, when you buy, let's use Japanese yen for example. When you buy Japanese yen, you are in effect buying a share in the Japanese economy. The price of the currency is a direct reflection of what the market thinks about the current and the future health of the Japanese economy. Now, in general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to the other countries' economies. Now, why do people trade Forex? Why do you want to trade Forex? The primary objective of doing any business is to make profits or money. Like I said, Forex is a business that involves the buying and selling of currencies. Therefore, the primary objective of every trader, everyone who participates in the Forex market, is to make money. Now, let's look at the benefits, the advantages the Forex market has over other financial markets. The Forex market has no physical location nor central exchange, unlike the stock market. Okay, the Forex market has no physical location nor central exchange. The market is considered an over-the-counter or interbank market due to the fact that the market is run electronically within a network of banks. Also, the Forex market is a 24-hour market. Okay, there is no waiting for the opening bell from Sunday evening to Friday evening. Okay, the Forex market never sleeps. This is awesome for those who want to trade morning, noon, or night. Okay, the Forex market also offers leverage. In Forex trading, a small margin deposit can control a much larger total contract value. Leverage gives the trader the ability to make nice profits and at the same time keep risk capital to a minimum. For example, Forex brokers offer 200 to 1 leverage. Now it means that with a $50 margin deposit, you would be able, okay, to buy or sell $10,000 worth of currencies. Wow. Now similarly, with $500, one could trade with $100,000 and so on. But you need to understand that leverage itself is a risk. Okay, you need to understand how to trade with leverage. Leverage is said to be a two-edged sword. It can work against you if you don't understand or if you don't know how to use this tool, and it can work for you if you understand how leverage works. Okay, so without proper risk management, this high degree of leverage can lead to large losses as well as gains. The forex market is also said to be a highly liquid market. Okay, because the forex market is so enormous, it is also extremely liquid. This means that under normal market conditions, with a click of a mouse, you can instantaneously buy and sell at will. You are never stuck in a trade. You can even set your online trading platform to automatically close your position at your desired profit level, or close a trade if a trade is going against you. Wow, you can set a stop loss order. Okay, I teach you how to do these things in the part 2 of this video course, how to close your position at your desired profit level and how to close a trade if a trade is going against you by using the stop loss order. The forex market also offers you free demo accounts, news chart, and analysis. Okay, most online forex brokers offer demo accounts to practice trading, along with breaking forex news and chatting services, all for free. These are very valuable resources for poor and smart traders who would like to own their trading skills with play money before opening a live trading account and risking real money. That is awesome. Okay, you have to demo trade, you have to practice, okay, before you invest your real money. That is awesome. That is awesome. The forex market also offers a mini and a micro trading. Now, you would think that getting started as a currency trader would cost a ton of money, but the fact is, compared to trading stocks, options, or futures, it doesn't. Online forex brokers offer mini and micro trading accounts, some with a minimum account deposit of $300 or less. Now, we are not saying you should open an account with a bare minimum, but it does makes forex much more accessible to the average individual who doesn't have a lot of startup trading capital. Now, there are things you must know before trading forex. There are things you must know before trading forex. There is a lot of misconception about forex trading. There is a lot of misconception, and if you come into the market with this misconception, you can be rest assured that you will lose your hard-earned money. You will lose your hard-earned money. So what are the misconceptions? Many people believe, they assume that the forex market is a get-rich-quick business. Okay, and I want to tell you in this video course that forex trading isn't a get-rich-quick business. If you venture into the forex market with an anticipation to become rich overnight, you will be disappointed. You would be disappointed. The forex market is not the casino where you gamble with your money. Okay, it's not a casino where you gamble with your money. You must learn the art of trading and treat it as a business. Okay, you treat it as a business. I teach you how to trade Forex, how to treat Forex as a business and not to gamble with your hard-earned money. Forex trading is a profession, therefore it requires time to master. Just like every other profession or trade, Forex trading isn't a subject that can be mastered overnight. Learning is a continuous process. Learning is a continuous process. Forex trading is a business and therefore it attracts risk. You must be willing to accommodate, you must afford the risk involved in trading the Forex market before you invest your hard-earned money. Before you participate in the Forex market, you must be willing to accommodate the risk involved in trading Forex. Lastly, Forex trading is a skill that takes time to learn. Skilled traders can and do make money in this field. However, like any other occupation or career, success doesn't just happen overnight. Forex trading isn't a piece of cake as some people would like you to believe. Think about it. If it was, everyone trading would already be millionaires. Okay, Forex trading isn't a piece of cake as some people would like you to believe. Think about it. If it was, everyone trading would already be millionaires. That shouldn't scare you. Okay, that it is difficult doesn't mean you can't master it. Okay, it doesn't mean you can't master it. If others are making millions via trading on the Forex market, you can also. So that shouldn't scare you. Okay, that shouldn't scare you. The truth is that even expert traders with years of experience still encounter periodic losses. There are no shortcuts to Forex trading. It takes lots and lots of time to master. There is no substitute for hard work and diligence. Practice trading on a demo account and pretend the virtual money is your own real money. In the part 2 of this video course where I show you how to download and install the MetaTrader 4, I teach you how to open a demo account so you can get started in Forex business via demo trading. Okay, so it is highly recommended that you demo trade, okay, for some period of time before you invest in the Forex market. Why traders lose money in the Forex market? Why do they lose money in the Forex market? There are two factors, okay, two reasons, major reasons why traders lose money in the Forex market, and they are fear and greed. Fear and greed, and that is why you are advised not to invest money you cannot afford to lose. When you invest money you cannot afford to lose, you begin to fear when you invest money you cannot afford to lose. Okay, and the fear of losing that money would result to losses. Okay, the fear of not wanting to lose that money is what will make you lose that money. Okay, also if you are greedy, you would find it difficult for you to make money in the Forex market. So these are two deadly emotions you need to check when trading in the Forex market. These are two deadly emotions you need to put in check when trading in the Forex markets. What are the tools you need to get started in Forex trading? What are the tools you need to get started in Forex trade? First, you need to acquire the basic Forex education. You need to acquire the basic Forex education, and that you are getting from this video course. Two, you need to have capital. You need capital to trade in the Forex market. You need capital to trade in the Forex market. You also need to open a Forex brokerage account. You need to open a Forex brokerage account. You also need time, okay, to learn the intricacies, the in and outs of this business. For those who want to build a career around Forex trading, you need you need time, okay. It requires time to master or to learn the markets. You also need the trading terminal, generally known as the MetaTrader 4. The MetaTrader 4 is an indispensable tool for every Forex trader. It is an indispensable tool for every Forex trader. You cannot trade in the Forex market without the MetaTrader 4. And in the part 2 of this video course, I teach you how to download and install the MetaTrader 4. Teach you how to effectively use the MetaTrader 4 in trading Forex. How do you make money in the Forex market? How can one make money in the Forex market? For you to make money in the Forex market, you need to buy currencies, okay, at a lower rate and sell at a higher rate. Okay, you need to buy currencies at a lower rate and sell at a higher rate. Okay, now before you trade or execute a trade in the Forex market, you need to understand what a currency pair is and how to trade them. Now, there are 8 major currencies available for trading in the Forex markets now, and they are the US dollar, the Great Britain pounds, euro, Canadian dollar, Japanese yen, Swiss francs, Australian dollar, and New Zealand dollar. These are the 8 major currencies we have in the Forex markets. Now, the majors are the most liquid and widely traded currency pairs in the world. Now, when any of the currency is paired with US dollar, it is referred to as a major currency pair. Now, example of the major currency pair is the Euro USD, the Great Britain pounds USD, the US dollar against JPY, US dollar against Swiss francs, US dollar against Canadian dollar, Australian dollar against US dollar, and New Zealand dollar against the United States dollar. Now, when any of the major currencies is paired with another major currency besides US dollar, it is referred to as a cross-currency pair. Now, example of cross-currency pairs are the Euro JPY, the Great Britain pounds JPY, the Euro Canadian dollar, Euro Great Britain pounds, Euro CHF, Euro Australian dollar, GBP Swiss francs, GBP Canadian dollar. Now, when a currency of an emerging economy is paired with a major currency, they are referred to as exotic pairs. I repeat that, when a currency of an emerging economy is paired with a major currency, they are referred to as exotic pairs. Traders rarely trade these pairs due to low volatility and huge spreads. Examples of such pairs are the US dollar against Hong Kong dollar, US dollar against Singapore dollar, US dollar against the South African rand, US dollar against Thailand currency, US dollar against Mexico currency, and US dollar against Denmark currency. Now, you need to understand currency pair and how to read a Forex quote. Okay, now currencies are always quoted in pairs. such as the uh, Great Britain pound sterling against the US dollar, or the US dollar against the Japanese yen. Now, the reason they are quoted in pair is because in every foreign exchange transaction, you are simultaneously buying one currency and selling another. Now, here is an example of a foreign exchange rate for the British pound versus the US dollar. Now, we have that on the exchange rate of Great Britain pounds against the US dollar equals 1.51258. And what does this mean? Now, the first listed currency to the left is referred to as the base currency, and the second currency listed, okay, to the right is referred to as a counter or quote currency. Now, in this example, the US dollar, okay, now when buying the exchange rate tells you how much you have to pay in units of the quote currency to buy 1 unit of the base currency. I repeat that, when buying, the exchange rate tells you how much you have to pay in units of the quote currency to buy 1 unit of the base currency. Now, in the example above, you have to pay 1.51258 US dollars to buy 1 British pound. You have to pay 1.51258 US dollars to buy 1 British pound. Now, when selling, the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. I repeat that, when selling, the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. Now, in the example above, you will receive 1.51258 US dollars when you sell 1 British pound. Now, the base currency is the basis for the buy or the sell order. If you buy Euro USD, for example, now it simply means that you are buying the base currency, Euro in this case, and simultaneously selling the quote currency, the US dollar in this case. Now, you would buy the pair if you believe the base currency will appreciate, that is, gain value relative to the quote currency. I repeat that, you would buy the pair if you believe the base currency will appreciate, gain value relative to the quote currency, and you would sell the pair if you think the base currency will depreciate, that is, lose value relative to the quote currency. Now, it is very important that you define the trend of the market before you execute any trade. It is very important you define the trend of the market before you execute any trade. Okay, and there are two ways you can achieve that. There are two ways in which you can achieve that. Now, there are two types of analysis in the forex market, and this analysis is what helps you define the trend of the market. Okay, so we have two major types of analysis. We have the fundamental analysis and we have the technical analysis. What is the fundamental analysis all about? What is fundamental analysis? Now, fundamental analysis is a way of looking at the market through economic, social, and political forces that affect supply and demand. In other words, you look at whose economy is doing well and whose economy sucks. The idea behind this type of analysis is that if a country's economy is doing well, their currency will also be doing well. This is because the better a country's economy, the more trust other countries have in that currency. Now, what is technical analysis? Now, technical analysis is the study of price movements. In one word, technical analysis equals charts. The idea is that a person can look at historical price movements and based on the price action can determine at some level where the price will go. Now, by looking at charts, you can identify trends and patterns which can help you find good trading opportunities. Now, the most important thing you will ever learn in technical analysis is the trend. There is a saying that goes, the trend is your friend. Now, the reason for this is that you are much more likely to make money when you can find a trend and trade in the same direction. Technical analysis can help you identify these trends in its earliest stages and therefore provide you with very profitable trading opportunities. Okay, very important you know the trend of the market before you execute the trade. You cannot make money when you trade against the trend of the market, and the, the chart, using chart would help you, okay, define the trend. That's the purpose of technical analysis. Okay, it's to help you define the trend of the market, and when you are able to define the trend of the market, that's when you will be able to make money from the forex market. Okay, in the part 2 of this video course, I take you through the technical aspects of trading, and there are some terms I've used in this slide, okay, that you might not understand. Okay, so I would advise, or I would employ, that you watch the part 2 of this video where I teach you everything you need to know about the MetaTrader 4, how you can effectively trade in the forex market using the charts. Okay, how you can analyze the market using the charts. Okay, so I thank you for watching this part of this video. I'll see you in the part 2 of this video course.